Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar has been full of surprises, with the Australian inflation rate coming out way lower than expected. The previous result came out at 8.4% with a forecast this month of 8.1%, and our actual came out at a really low 7.4%, showing that inflation in Australia is cooling. This afternoon, traders can be on the lookout for the ISM manufacturing PMI out of the USA being released at 5 o'clock South African Standard Time.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar traded higher yesterday and posted strong gains for the month of February. While the sterling gave back some of its gains from the previous session after the UK signed a new post-Brexit trade deal with the European Union. The dollar has been on a tear for the month of February, as a stronger than expected economic data, including hot inflation numbers, pointed to the US Federal Reserve rising interest rates further and keeping them high for longer than previously envisioned. Now looking at our analysis on USD ZAR. As we can see, USD ZAR was unable to break that primary resistance level at 18 Rand 50 cents to the dollar. It has now started a correction back down to our diagonal support level at 18 Rand 20 cents to the dollar. Should this level be respected, we can see the bulls making a second attempt at breaking that 18 Rand 50 cents to the dollar level. Should this level, however, be broken, we could see a further sell-off back down to our primary support level at 18 Rand to the dollar. Now let's move over and see what's making headlines on Wall Street. Indices closed out the month of February with significant losses, while traders continue to monitor a bunch of earning results. The optimism that drove shares up and global bond yields down in January has ended, as data from around the world has pointed to economies and labor markets facing little in the way of strain from high inflation. The concern now is less about a global recession and more over the prospect of continual interest rate rises from across the world. Looking at our analysis on the US 30, also known as the Dow Jones Industrial Average, we are currently hovering within that zone at our primary support area around that 32,600 level. Should this primary support level be broken, we could see a further sell-off back down to that next primary support level at 32,000. Now let's move over to commodities. US crude stockpiles extended their builds by around 6 million barrels last week, according to a report from the Petroleum Trade Group API, which indicated the government was likely to cite a 10th straight weekly build in crude in its own data due today. Oil prices, however, rose this morning as stronger than expected Chinese economic data drummed up hopes for a demand rebound in the country, helping markets to look past signs of yet another large build in US inventories. Looking at our analysis on crude oil, we are currently within that primary resistance zone. Should we get a nice clean break of that $77.5 to the barrel level, we could see this specific instrument rally and buy back up to $80 a barrel, or potentially even further up to $82 a barrel. Gold prices logged their second recovery day from their lowest level this year, with focus remaining on any more signals on the US economy and the Federal Reserve. Metal markets took some relief from some softer than expected US business activity and consumer confidence data released yesterday, which indicated that certain facets of the economy were cooling under rising interest rates. Looking at our analysis on gold for today, we can see here that we have broken that diagonal resistance area and came back to retest it on the 4-hour time frame. We are currently trading above that 50 EMA, and if we do remain here, we could see a potential rally back up to that next primary resistance level at 1860.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.